Welcome in our class today, and today we are going to be able to discuss about the subsidiary books of account, which sometimes we call the books of original entry. So we are going to have a discussion on the subsidiary books of account, subsidiary books of account. And when we talk about subsidiary books of account, there are those particular books of account that do not take into consideration the concept of double entry. So they are not going to recognize the concept of double entry. And you know very well, when we talk about the concept of double entry, it clearly states that for every debit entry, there must be a corresponding credit entry. And these particular subsidiary books, or what we call the books of original entry, they include, we are going to discuss the four main ones. Number one, we are going to discuss about the sales journal. So you talk about the sales journal, and then number two, we are going to discuss about the purchases journal. So we talk about the purchases journal, and then number three, we are going to discuss about returns inwards journal. So we talk about the returns inward journal, and lastly we are going to discuss about returns outwards journal. So you'll be able to talk about that particular, the returns outwards journal. So now those are the four main books that I want you to be able to understand: how to prepare the sales journal, how to prepare the purchases journal, how to prepare the returns inward journal, how to prepare the returns outwards journal. So now these particular books, the function or the main purpose of preparing the sales journal is that in the sales journal we are going to record a credit sales. So under this particular sales journal, we'll be able to record the credit sales. So you'll be able to record a credit sales here. So whenever you sell on credit, you are going to record it here, the credit sales. So whenever you sell on a credit, you are supposed to record it under the sales journal. And you know, when you sell on credit, this is whereby you sell commodities and the customers are going to pay you later. So you are supposed to be able to record it under that particular, the sales journal. When we talk about the purchases journal, this is whereby we are going to record credit purchases. So you'll be able to record credit purchases. So under the purchases journal, we'll be able to record the credit purchases. Anything that you actually purchased on credit. So sometimes you can go to your supplier and then you purchase some commodities and then you pay at a later date. So whenever you make that particular credit purchases, those amounts that you are going to be able to buy, the amounts of commodities that you are going to be able to buy, you are supposed to be able to record it under the purchases journal. And remember, you can see that we are talking about on credit. So cash transactions are not going to be recorded under these journals. The cash transactions, they usually go to the cash book. So if they are going to give you that you purchased something on cash, that one cannot be recorded under the purchases journal. That one is going to be recorded in the cash book. And we are going to discuss about that one later on. So when you talk about the returns inward journal, this particular the returns inward journal, the other name of returns inward journal is basically the sales returns journal. So that's the other name of that particular the returns inward journal. We can also call it the sales returns journal. So the main function of the sales returns journal is whereby now you sold a commodity to a customer. Maybe you sold a commodity to Fatuma, and maybe Fatuma realizes that some of the commodities that you sold to her, they had actually, some of them had expired. So Fatuma, who is your customer, is going to return that commodity to you. So that's why they call it returns inwards. You had actually sold it off to Fatuma, but now Fatuma is returning it to you again, to your business again. So that's why they usually use the word returns inwards. So under the returns inwards, we basically record the returns from our customers. So when our customers are going to be able to return the commodities, we are supposed to be able to record it in the returns inwards journal, or the returns from our customers. So the functions of the returns inwards journal, or what we call the sales returns, that's why they usually call it sales returns. What you had actually sold is being returned to you, sales returns. And we have said that we are going to record the returns from our customers. When customers are going to return to us, we are supposed to record it in that returns inwards journal. So when you talk about returns outward journal, the other name of returns outward journal is actually the purchases returns. Purchases returns. So that's the other name of the returns outward journal, what we call the purchases returns. The purchases returns. So now, in this particular case, we are returning to our supplier. So the returns to our suppliers is going to be recorded in the returns outward journal, because now what we had actually purchased from the supplier, we are returning it to him or her. So the goods are leaving our business to the supplier. Maybe sometimes we purchase from the supplier and we did not purchase the goods of the right quality or the right quantity. So we are returning those particular commodities to the supplier. The commodities are leaving our business, going to the supplier. That's why we call it returns outward. So whenever we return to the supplier, then we are supposed to record it under the returns outward journal, or what we call the purchases returns journal. What you had actually purchased, you are returning it. That's why they usually call it again the purchases returns journal. So now, these particular journals, we have others which we are going to discuss later, but the highly tested ones are the first four. We have the general journal, and we are going to discuss about it later on how to prepare it, that particular general journal. But now I want you to understand the four journals that are highly tested in your exams. The other name of journals, sometimes they can call them day books. So the other name of journals is actually day books. They call them day books because transactions are recorded on daily basis. So sometimes in the exam, they can ask you to prepare the sales day book. So sales day book is the same as the sales journal. They can ask you to prepare the purchases day book. The purchases day book is the same as the purchases journal. So sometimes we can call them day books because transactions are recorded on daily basis. We call them journals because the transactions are recorded in a chronological format from the first date to the last date. So that's what you need to be able to know. So these particular journals are prepared as follows. Like now the sales journal, we are going to have it here, the date, details, amount. The same as the purchases journal, we are going to have the date, details, and also amount. Returns inward journal, which we have said that we can also call it the sales returns journal. We are going to have it as the date, details, amount. And then we have the returns outward journal, which also we can be able to call the purchases returns journal, having that the date, details, and the amount. So we are going to have a question to be able to record transactions in these particular journals. So now that is the question there. We have that question of Zawadi. So you can see the question of Zawadi there. That's the question I want us to be able to attempt. So we have been told that on 1st January, maybe we can have, it was maybe 2019. So on 1st January 2019, Zawadi performed the following transactions. So we have the date here, and then we have the first date, which is purchased goods on credit from Evans, 300,000. So we have been given that transaction. Whenever you see the word purchased goods, so of course we purchased on credit, you can see that it's on credit. So journals, it must be on credit. We said that cash transactions, they go to the cash book. So this one, the moment you see the word purchased, that one goes to the purchases journal. So you're going to write date 1 under the purchases journal that way. And then we purchased from Evans. So you're going to write Evans here. And then you will be able to write the amount, which is the 300,000 that way. 300,000 shillings. And then on this particular date too, we have been told that we made credit sales, 140,000 shillings to Fatuma. So we sold it to Fatuma. So when we made credit sales, when you see the word sales, that one is going to be under the sales journal. So we're going to have here date 2, and then we are going to have Fatuma under the details, and then we'll be able to record the 140,000 shillings in that manner. So that's how you are going to be able to record it. So we are done with date 1 and date 2. Date 3, we are being told returned goods amounting to 10,000 to Evans. So we returned goods amounting to 10,000 to Evans. This is where most of the students usually confuse. The first thing that you are going to ask yourself, who was Evans? So you go back here to the first date. This is where you can see Evans was mentioned, which was purchased goods on credit from Evans. So it means that whenever you purchase from that individual which is Evans must be a supplier. So Evans is actually our supplier. And you know very well that returns to a supplier, that is going to be returns outwards. Because now we are returning to the supplier. The goods are leaving our business, going towards that particular supplier. So that one is supposed to be returns outwards whenever you return to our supplier, because now that's purchases returns. What you had purchased, you are actually returning it. So you are going to write date 3 under returns outwards here, and then you write Evans, and then the amount is going to be that 10,000. The amount is going to be 10,000 in that particular manner. So we are done with date 3. And then date 4, we have been told sold goods on credit, 70,000 to Peter. So we sold goods on credit amounting to 70,000, and we sold those particular commodities to Peter. So whenever you see sold, that's going to be the sales journal. So you're going to go to the sales journal, this particular date 4, then you write Peter, and then you write that amount, which is 70,000, which is 70,000 in that particular manner. So we are done with that particular date 3, and then date 4, and then we go to date 5, whereby we have been told Fatuma returned goods worthy 3,000. So Fatuma returned goods worthy 3,000. So you have to ask yourself, who is Fatuma? And you can see Fatuma on date 2. It was actually made credit sales to sales 140,000 to Fatuma, which means that we sold to Fatuma. Fatuma is our customer. So Fatuma is the one returning. We say that whenever a customer is going to return commodities, that one is going to be returns inwards. Remember, the other name of returns inwards is the sales returns. We had actually sold it to Fatuma, and Fatuma is returning to us. So the goods are coming inside the business. That's why it's going to be returns inward. So what you're going to be able to do here, you're going to be able to go to returns inward on this particular date 5. And then you write Fatuma and then you write the amount, which is 3,000. So you write that amount, which is 3,000 in that manner. And then we have this date 6, and the date 6 says made credit purchases 100,000 from Mary. So that is actually the purchases journal, because you can see it was credit purchases. So you're going to write date 6, and then you write Mary, and the amount was 100,000. So you're going to capture this 100,000 in that particular manner. So you'll be able to record it in that manner there. So we made that particular credit purchases. It was made credit purchase and 100,000 from that particular Mary. So now those are the transactions that we have. We have for the transactions from date 1 all the way to that particular date 6, all the way to that particular date 6, and that's how you prepare those particular journals. So the other thing that we just do is summing them up. So you add, you put some equals there, and then you add them up. Like now this one will be that 10,000, so you add them in that particular manner. And this one will be to 10,000. And then we have this one, which is 100,000, and then the last one will be 3,000 in that manner. So that's how you prepare the journals, which also we call the subsidiary books. So we stop there for today. Thanks a lot.